Hello. Today, Bitcoin long-term price prediction. Now, where the hell is Bitcoin going to go? Predicting both a price and a time is a fool's game. Literally, no one knows what's going to happen in the future, and we know that. However, there are some tools that I found valuable that I'm going to talk you through today that I believe any investor can use to understand the value of Bitcoin and equally to start throwing around some price predictions. Now, I like the phrase, you know, some models are useful, most are dangerous. Essentially, take a pinch of salt. So when you see, YouTube accounts that blow up in a moment of days, making outrageous claims on where the Bitcoin price is going to be in the future and throwing thousands of charts at you, it's dangerous. However, there are some other first principles based modeling that I really like to use. What are we actually looking for? Well, we're trying to predict, of course. Now, no one can necessarily tell the future, but there are some things that we can look at for trends. We want to understand human behavior. Are people going to use Bitcoin as money? Are people using it as money? Are they going to see value in it in the future more so than today? How much money is going to be printed? It all comes down to human behavior. Now, as a new technology, we want to see the strength of Bitcoin and is it going to be stronger over time? Whereas, lastly, what's the risk? You know, is buying a ton of Bitcoin instead of buying housing actually, less risky or more risky? Anyway, some of these concepts will help you think that through and helped me. So this is point number one. So this is from the startup world, and I really like this. So there's a phrase which is one should invest in lines and not dots. Now, let me explain what that means. If I meet with a startup team today and they have a team of people and they have a product that's pre-market, pre-revenue, but really interesting market, it's like, okay, cool. You can take that down as a data point or a dot. Now, if you wait 12 months and you meet with that same startup again, you can look at their traction. So, how much progress have they made? Have they taken customers on? Have they got revenue? Have they iterated on their product? Exactly what has been going on under the hood for those 12 months? And you take that data, and that's your second dot. And at that point, you can create a graph, time versus traction, and you can start plotting the dots. And if you've looked at 10, 20, 30 different startups over the last year, you can start to compare the progress rates. And really, what you're looking for is the company that's going to break out as fast as possible from a very, very early starting point to generate value. And the point is, traction trumps everything. So if you can buy equity in businesses that create outrageous traction, very, very nice spot as an investor. Now, the relation here to Bitcoin is I'd owned it for 5 or 6 years, and I suddenly realized that Bitcoin was the best line I had ever seen when it comes to an investment. It was liquid the entire time. I had ownership of it in self custody, and the price was flying. I'm like, oh my gosh, I must take a closer look at this. And of course, that's ended up in me being a huge Bitcoin advocate. Next is the golf buggy test. I've written here, who cares about golf? Well, next time you go to the golf club, think about a situation like this. Your mate arrives, jumps off the buggy, hole number one, hasn't even hit the ball, and is bragging about an investment they've just made. Oh, mate, you'll never guess what company I know of. I managed to get in on their early round. Really cool business. It's going to go gangbusters and change the world. Now, what is this a proxy for? Virality. Really exciting, this. And so think about that next time. Does Bitcoin pass the golf buggy test? Well, in my opinion, yes, because it's the best brand that has no marketing department, like without a doubt. It's probably one of the top 10 brands in the world, which is extraordinary. So think about that. Does Bitcoin pass the golf buggy test? What will the price be in the future? Will it be more valuable than today? I think it probably will. Now, I'd love to take a quick moment to request a like. It helps with the YouTube algorithm. If you're enjoying this, then please give us a like. Now, the next is something called the Lindy effect. Now, the Lindy effect is an interesting phenomenon in which if an idea, so it's a non-perishable good, or a technology in that sense, has lasted for 20 years, then the chances are it will last for another 20 years. Now, you could say, a book that's been around for 40 years might last for another 40 years. I think you get the point. The lifespan or the predicted lifespan into the future is proportional to its current age. Now, where's that important with Bitcoin? Well, I've heard the number of 20 years thrown around. Think about this. There are some 13-year-olds in the world today that have known no world without Bitcoin. Well, what does that mean? Well, in my opinion, it's very bullish for future use cases and for the general public to accept that it exists and that it will continue to survive in the future. And when it's just a given, people just buy it, people just use it. So the next point's an interesting one. This is where we can really dig under the hood when it comes to Bitcoin. It's completely impossible in the fiat-denominated debt-based system that we know of as the status quo. There are on-chain analytics businesses, and they look, for example, at the number of wallets, how many people are signing up, how much Bitcoin's in each wallet, whereabouts are they, coming onto the internet, etc. And what they notice is some very clear trends, and that is that in places in which the financial services industry is less developed, so I'm thinking of countries like Nigeria, countries like India, countries like Vietnam, it is absolutely booming. People are flying to this innovation and they're using it every single day. And that is what I like to think of as product market fit. But the point here is you don't have to trust the system. You can actually just go to the Bitcoin network, have a look at the blockchain, have a look at the hash rate, have a look at user adoption rates, and you can see that it's growing. So again, long-term price prediction, it's like, well, if we see the user adoption going up and there's a scarce amount of coins, well, that's less supply, more demand. Good for long-term price. Now, our next step, and this is really just a step that I've been through, it's also a primary research step I encourage you to do. So the previous version, let's say, of this YouTube channel was called Bitcoin with Jake, and it was a podcast in which I focused on personal journeys to Bitcoin. I spoke with 80 people, different walks of life, all over the world, and specifically digging into this concept, which I love, which is ask a man what he owns, not what he thinks. And so people would happily tell you, I'm 50% Bitcoin, or I sold all this stuff to buy Bitcoin. I'm a professional or got this skill set in a certain area. And it's like, why are they all being drawn into this thing in a global nature, but with such different skill sets? It was extraordinary to witness, and I enjoyed the process. So I encourage you to keep on digging. But what does it mean? Well, there are people out there that I know for sure have put their entire life into Bitcoin. That's very, very interesting for long-term price prediction. Now, this is the stage that I think is probably most useful to run you through. We can do a market analysis. What is the market telling us with today's pricing? So the first step of this is to understand, okay, what is the total addressable market of Bitcoin? Well, a number that I'm going to use for this example is total global assets, $900 trillion. So, okay, well, what happens if Bitcoin as a store of value takes 5% of that? Okay, well, that's 45 trillion. Okay, well, there's 21 million coins. We divide 45 by 21. We end up at $2 million a coin. That's insane, isn't it? Wow. Okay. Now let's take into account that $900 trillion for global wealth was from 2018, so that number's old. And equally, there are a number of Bitcoins that will never make it back into circulation because they've been lost. So actually, it should be divided by 15 million or 16 million. Either way, the point is that we can say if Bitcoin reaches a 5% market size, then it's going to be worth roughly 45 trillion, in which case that's $2 million a coin. Holy crap. And we're sitting today at 30,000. It's like, okay, well, let's do now some probability analysis. 30,000 US dollars, roughly on today's market, I think it's 28 and a half or something. 30,000 into 2 million, we're looking at 1.5%. It's like, okay, so the market is pricing a 1.5% probability versus the figure I've just calculated. Okay, so what's my view? Am I of the view that Bitcoin is very likely to achieve a 5% market share? Let's even say, for sake of argument, I take a 50% probability that that 5% becomes realistic. In which case, I have a price target of $1 million US per coin. So I should be a buyer of Bitcoin all the way up to 1 million if that holds to be the case. Now, in lies the simple mathematics behind what people describe as the best asymmetric bet they have ever seen in their lives. This is 30-year-long investment specialists and traders, and they look for these kind of opportunities all day long. Now, how exciting is that? Just consider a $1 million Bitcoin, a $2 million Bitcoin. This is extraordinary. But actually, also the flip side of that is, what are the chances that Bitcoin is actually inevitable? And when you look at the issues with the financial market and the way that money functions and the problems that Bitcoin solves, and thinking back to those countries like Nigeria, like it's extraordinarily bad, the financial services people have. And when they come across Bitcoin, it's a no-brainer. They just say, "Yep, done. We'll start using it." So, in all realistic, I think Bitcoin could take much more like a 50% market share. But let's see. Time will tell. I hope you've enjoyed thinking through those 6 different price prediction tools that I've utilized myself to play the game. As I mentioned at the start, predicting price with a timeline is a fool's game. I currently have a 150,000 Aussie dollar price target for August of 2025. I could be completely wrong, of course, but that's what I'm aiming for as the top of the next bull cycle. Let's see. Time will tell. Now, does any of this resonate with you? I'd love to hear from you. Comment below and get in touch. There are a number of areas that I didn't even touch on, such as value investing. People talk about cash flow. If I don't see cash flow of an asset, how do I value it? Well, I've just shown you 6 ways of potentially valuing Bitcoin that don't involve yield. There's also technical analysis, which is really just kind of trend analysis that I like. Think about the 200-week moving average. If you buy Bitcoin when the price is below that average, you're buying in an area of value. And that is interesting regardless of the asset class that you're purchasing. So any asset, if you can buy it below the 200-week moving average, and you can be very confident that asset isn't going to go completely bankrupt. If it's an equity trading at sub the 200-week moving average, it might go bankrupt. Bitcoin, when you look at the hash rate and the user adoption, this thing's not going away. Lastly, past performance is not indicative of future performance. Keep that in mind. Of course, we've seen amazing gains, but this has definitely been the early stages of the S-curve. And it's very clear how technology is adopted over time, moving from, the innovators to early adopters through to laggards. Anyway, I hope you've enjoyed this. Please reach out if I can help in any way whatsoever, and let me know what's resonating with you. Thank you.